Hello and welcome to Edison TV on a beautiful crisp morning in London town. Now, what would you think of if I said the name Ajax to you? Now, you might think of the Trojan War hero, second only in strength to Achilles, or you might think of HMS Ajax, who together with her other cruisers, one of them her sister, I'm sure, Achilles and Exeter, cornered the Graf Spee off Montevideo in December 1939, almost exactly its anniversary, actually, as we're speaking, and in the first great naval engagement of the last Great War, the Battle of the River Plate, which ended with the scuttling of the German pocket battleship. Or, given that Edison is an equity research house, you might think of Britain's newest mining company, Ajax Resources. Now, several things you ought to know about Ajax, but maybe the most important is its share price since listing on Aquis earlier this year has gone up from 4p to very nearly 7p. So I think you can see what that means in terms of annualized returns to shareholders. Now, I could tell you about Ajax, but I think we can go one better here because we actually have the Chief Executive Officer, the CEO of the company, Ippolito Cattaneo, in the studio with us. And so I'm going to turn to him. Ippolito, very good morning.
Good morning.
Thank you very much indeed for joining us and welcome. Why don't you tell us what's behind the success of Ajax so far?
Thank you for your introduction, for the historical point about our name, which is always appreciated. So Ajax is very much a board-driven company. The board has roughly 35% of the company's shareholding, and we specialize in acquiring assets with historical production, which following new investment, be it technical and in terms of personnel, can be brought back to life. So we specialize in gold and copper and zinc. We acquired our first project in May of this year, which was the Eureka project, which is a project which we acquired from a London-listed company called Ajax Resources. They had acquired the project in 2010 for $8 million, and you know this project because you previously wrote about it. It is a good project, and it has never been drilled in its 400-year history of production. So we're going to start drilling in the next 2 weeks.
So that's your lead project. So Eureka in northwestern
Argentina.
Northwestern Argentina, called Eureka. Now, it doesn't yet have a formal JORC compliant resource, does it? That's the sort of thing it's missing, despite the fact it's actually been mined for, I was going to say donkey's years, but actually donkey centuries, about 400 years on and off.
That's correct. So it was first mined during the Incan period. And then the Jesuits took over later on in history and started producing copper and gold from the mine. It has a historic mine called Mina Eureka, but what the project doesn't have is any form of drilling. Many large companies have looked at the project, but they never drilled it.
They did sort of come up with their own resource estimates. They
were non-JORC compliance estimates. So we have two numbers that I like to quote, which are 52,000 ounces of gold, which in the current gold environment is significant. And then, but more importantly, this is primarily a copper project. So we have 62 million tons of copper at 1%, so that's 620,000 tons of copper. And that is a non-JORC compliant number, but that would equate to roughly $5 billion worth of copper.
But it's worth pointing out, I mean, these weren't fly-by-night companies making these estimates. I mean, this is the likes of Codelco and Peñoles.
Correct.
So these are, Codelco, the Chilean state-owned copper producer, the largest copper producer in the world, and Peñoles, the largest miner in Mexico.
Yes.
So it's not some.
These were big companies. They didn't. I mean, the question will inevitably that will follow from what you've said is, well, why didn't they develop it? And I think the answer is it wasn't. That these are extremely large companies, so it didn't have perhaps the scale that they wanted. And they looked at these projects when the price of copper was significantly lower as well. So that is an added factor to bear in mind. We acquired this project for $170,000 without any form of royalty or deferred payment.
Which is kind of nothing.
Which is a nominal consideration. Edison acquired it for $8 million. Another question we get is, well, why did you pay so little when the price of copper and gold has only increased in the 15 years since Edison acquired it? And the reason is simply that the project was sitting on a portfolio, and and Bezant wanted to part ways with it, and didn't have any interest in investing in it. So we believe in Argentina. We like Argentina. We feel the project has very significant potential. We will know this for sure in the next 6 months. We're starting our drilling campaign. Obviously, the first drill hole won't give all the answers. It will give good indications, but we will continue to drill. And we've also continued our strategy because we always want to diversify and enhance our portfolio. We've conditionally acquired the Paguanta project in Chile. Very similar profile, although much more advanced than Eureka because it does benefit from an MRE already. It has a historical spend of roughly $35 million, 67,000 meters of diamond and RC drilling, so a long history of development. And it's a historic silver mine, and it's a silver, zinc, lead deposit with 2 highly prospective copper targets that have been identified. So that is a very complementary acquisition, which we've again acquired for a nominal sum. So the upfront consideration is 75,000 USD in a 50-50 share and cash consideration mechanism. And we're looking at other deals as well in the South American region, which all fit this similar sort of profile of being assets with a significant historical spend. And for various reasons, they haven't been developed, and we step in at perhaps the final stretch of the marathon and bring the bounty home.
So just to sort of summarize a little bit, there's Eureka in Argentina. Historically, there are some non-JORC resource estimates, about 600,000 tons of copper. In order to, and by very respectable companies like Peñoles, like Codelco, what you have to do is you have to get your environmental impact assessment approved. You then go and drill that, and the idea is to get a JORC compliant resource by what, first half of next year?
Yes. So what we want to do for Eureka is do what hasn't been done and what it needs to really value the project, which is to publish a maiden JORC compliant mineral resource estimate. So
Any idea how much that will cost?
It will cost, well, it depends which drilling provider you use, and we've something that perhaps will be announced in the near future. We're developing a good relationship with a local technical partner. So we've been able to secure pretty attractive terms of drilling costs, which of course means that we can drill more with the same budget. And the budget, we're spending roughly about $200,000 now for the first 1,500 meters. And then, the full budget is probably 1.5 million, but we're fully funded. We've done a fundraise in May and we topped it up in June with a small addition. We're fully funded for Eureka, so we don't need to raise any more money for that. If anything, we'll try and reduce the budget, do more work and have the same budget. So we're not too concerned on that. Of course, if we acquire other projects, there'll be additional cash needs. There's no disguising that. But the idea, of course, is with the results of Eureka, we'll be able to raise money at a much higher valuation, and so the dilution, which is something that owning 35% of the company as a board we don't want, will be to the smallest degree.
Yeah. So you get then the mineral resource out, the JORC compliant one, within about the next 7 months.
Sure.
And then the market goes, right, okay, I can see the estimate. We'll give you value for that, which you're probably not getting at the moment because the market can't see it. You get value for that. Share price goes up, and then probably that's the moment to raise more capital.
Yeah, well, I mean, look, the important point I think is getting proof of concept. Yeah. What we do is we acquire unloved assets and then we invest in them and seek to bring out that value. For $170,000, I'm sure that considering the number of reports and studies that have been conducted in connection to this project, we're sure that we know that there's a historical mine, so we know there is mineralization. The idea also, which I didn't set out as clearly as I would have liked in our initial part of this interview, is that we are a cash generating focused company. So we don't want to be the last in a long list of exploration companies that periodically raise money to keep the lights on. We want to have in-house revenue. So one thing we've done, which is perhaps rather peculiar, but in the current gold environment is appropriate, is to explore alluvial gold production, because on our project in Argentina, which by the way, we've doubled in size since acquiring it.
So this is still Eureka?
This is still Eureka, but the Eureka which we acquired in May is now twice the size, because we've acquired the mining rights to a number of strategic licenses nearby. to basically ensure that if we strike gold and copper in the coming months, we don't have the same licenses won't cost 10x more than what they did previously, and also to increase the resource size potentially. So we double the size of the Eureka project, and one of the licenses we acquired is called landlord tenure, and in this license we see a lot of alluvial gold prospectivity. So we what we'll do, and it's a fully legal and quite a thriving industry in Jujuy, which is our province in Argentina. We will hire and construct assembled teams of workers led by a geologist specialized in alluvial gold to produce gold, and then sell that. So that will mitigate any exploration risk, because we need to be real in the sense that not all drilling activities will be successful. Although our strategy should mitigate that somewhat, because we're only drilling projects that we know have historical production. But the revenue generation is a big focus of our business. So Paguanta, why do we like it? We like it because it's very advanced, but it also has the potential in the near term to be a producing mine. So, and Eureka as well. I mean, the idea is to define a resource, and then within 3 or 4 years, start mining. So in obviously with an open pit deposit structure. So we we want to minimize dilution and also have organic in-house revenue.
And that very much to be applauded, I think, within the current environment. Let's just go back to those alluvial ounces, because they make television shows about this sort of thing. What is it, gold seekers or something? I mean, this is literally digging up gravels either from riverbeds or old riverbeds, putting them through a mobile plant and extracting the gold via gravity means. But just order of magnitude stuff, you would hope to produce couple of thousand ounces a year, that sort of order of magnitude?
So we have a range of numbers that we're hearing. I think it'd be premature to give you an exact number, but what I've, one very bullish and optimistic geologist quoted, up to 5 kilos a month, which I think is an extraordinary number, which I'm not going to put my signature to.
So that's 150 ounces roughly.
My maths on ounces and kilos is rather rusty, but I think that the 1 kilo of gold in the current environment is roughly in excess of $100,000.
Yeah,
to put that into perspective.
Yeah, so we're just shy of a couple of thousand ounces a year. So maybe revenue of $8 million a year,
something like that.
That's sort of that's what we're vaguely aiming at.
But I think that the goal will be to sort of exponentially. I would very conservatively say 1 kilo a month to begin with, and then ramp it up, which I think we can do. But the mechanism that you outline is exactly that. It would be teams of workers led by a local geologist who would, in a very sort of rudimentary but safe and legal fashion, mine the surface up to 6 meters. Really, that's I think the limit for artisanal and alluvial gold. And we would have mobile processing facilities that would accompany them, and we would then sell the gold. And it's a thriving industry. If you visit the project, there's hundreds of people walking around with metal detectors in certain areas. In fact, not in our immediate proximity to where our operations are, but it's the current gold environment. It's a no-brainer, and the area is known for having for centuries it's been known to be mineralized. So that's where we are. So we simply said, well, if many people are doing this, why don't we? And we've doubled the size of the project, so it makes sense to derive as many benefits as possible from our license package.
So that's Eureka, which is resource by middle of next year. JORC resource and value from that. Hopefully some near-term gold production, alluvial gold production as well, just to keep the counter ticking over. Tell us about Paguanta.
So Paguanta has an MRE, JORC-compliant MRE, and it has roughly 6.8 million ounces of silver, and there's lead and zinc as well. So we've got a total resource of roughly $500 million worth of resource in situ.
So that's resource. So that would be the total value of the resource at current prices of silver.
Well, no, actually, we would probably have to revisit that. But I mean, conservatively, I would say let's use current. Let's say it's current. So it's just in excess of $500 million dollars worth.
I mean, you probably can't say this, but I probably can, which is that we think that silver in the ground is probably worth about. This is in the ground, not out of the ground, but probably worth about $1 an ounce. So that gives you a bit of value there. But and you're in the last stages of buying this from Asara.
Yeah. So no.
For what sort of consideration?
$75,000 is the upfront consideration.
Okay, so literally nothing.
Nothing.
Sorry, not literally,
well, yeah,
figuratively nothing.
A nominal consideration, and then we've got an NSR of $500,000. So we initially signed the deal earlier in the year, and we had a higher number, but then we did our DD, and we came across certain issues that are all fixable but require slightly more investment. So we came back to them, and we had a very cordial and civilized conversation, and we said, look, these are our findings, and we would like a discount, which they very gracefully gave us. So we have revised terms, which I think are favorable for Ajax. And so we got 75,000 up front, which is a 50-50 split between cash and equity. We've got 2 milestone payments, which are each of $500,000. Which are regarding the zinc target. If we reach, I believe it's 25 million tons of zinc, and then we've got another 500,000, which is unlocked if we define 5 million tons of copper, and then we've got an NSR of $500,000, which was previously $850,000, which will be activated on first production, but it will only be activated once we have 2 quarters of production. So there's a slight grace period. And the price of zinc per ton has to exceed $2,600. So that is favourable.
It's worth saying those payments are quite far down the track.
Very much far down the track.
The project has to develop quite meaningfully. Also, probably worth saying that Asara are selling this not because it's worth what you're paying for it, so to speak, but they want to concentrate on their lead asset in West Africa.
In Guinea, correct. Yeah, so it's the same story with Bezan. It's not necessarily that these projects are bad projects. People say, well, why are you buying these projects if they're, for such nominal sums? Is there anything amiss with them? Not the case here, or in either of these 2 cases. It's simply companies that have acquired, the management teams that acquire these projects, and not the management teams that are selling us these projects. And they're both focused on Africa. Asara is a successful ASX-listed company that has recently raised 20 million plus USD for their Guinea project, and this Paguanta project is a legacy interest that they have. They have no appetite to develop it because they're a high impact exploration company focused on 1 million ounce gold discoveries. So a more progressive incremental production story, which is what we want to do at Paguanta, is not really compatible with their strategy. There's also a copper prospectivity, which you might argue would be compatible with their strategy, but they're not a South American investor. So that is why they're divesting this project. And again, Bezant, similar story, an African-focused company. So these are 2 projects which are good projects, which have been unloved for a long time, and we're coming back to bring them to life.
So how do you take Paguanta forward? How would you like to see it in, say, 3 years' time?
So Paguanta needs a reactivate. It's been cold stacked, to borrow an oil and gas term, for a long time. So we need to firstly understand the project. It has a history of significant development, but it also has been dormant for a long time. There are communities that need to be reached out to, engaged with, and a relationship needs to be built with them based on trust and transparency and responsible mining. So that is the first task that we will embark on. Nearby, we have a very big company in tech that has acquired the Loreto project from the same vendor, which is Asara. So, and the communities that that are involved in the Loreto project are the same communities that are involved in the Paguanta project. So we know that there's a way to work with these communities, to engage with them in a good way, and to get a win-win for all parties. So the first goal will be to understand the significant amount of work that has been done geologically and technically, reach out to the communities, develop a relationship with them, and then, to answer your question, within I would say 2 years, there's also some licensing that needs to be done. Within 2 years, start, firstly, we'll be doing the drilling to hit those copper targets that we like.
And tell us a little bit about those copper targets.
So those 2 targets are, so the Paguanta project has an MRE on what is called the Patricia prospect, which that 500 million number I gave you is in respect of that. But there are 2 other targets which are Doris. I'm not sure he gave you.
Not sure who came up with these names, or why.
So we've got Doris, as I mentioned, and then we've got La Rosa, which are the two copper prospects. One is a copper-silver prospect, so potential for additional silver, which in the current environment we like. And so those are untested targets, largely untested targets that we will do. So there's always a dual binary kind of nature of our work, which is benefiting from the historic work, but also then engaging in exploration work, because we are a hybrid entity with an exploration side, but also so we call it a development side and a production side. So there'll be the exploration upside from those two targets. In the current copper environment, we feel that is appropriate. It is a polymetallic deposit, so there'd be no reason to doubt why there wouldn't be copper prospectivity. In fact, you can see the copper at surface, so that is encouraging. And then
is this all sort of classic Chilean copper stuff, mineralization? Because we're ring of fire stuff here, aren't we?
Yes.
Sort of. So, are these the sort of the edges of a copper porphyry?
Exactly right. Yes, it is. And it's in an area where we have, as I mentioned, tech nearby, with the Eureka projects, and we've got a number of other big players in the region, and Chile is of course one of the leading, if not the leading, mining jurisdiction, certainly in South America, if not the world. So it was a strategic move to acquire. We were very. It's funny because when I set up Ajax in 2021 and listed it in 2022. It took us 3 years to complete our first deal, because we announced the Eureka deal in May 2025. And some people were rather impatient and said, it's taken you 3 years to find an asset. That's an inordinate amount of time. But what perhaps they missed was that we looked at the great number of projects during these 3 years. And Paguanta was actually a project that we've known for maybe a year or two. So this transaction has been, it's been in the works for some time. And so that's why we've been rather, the acquisition mode has been fully activated now, but we benefit from many years of viewing a great number of projects. So that is why we may seem to have a deluge of acquisitions all coming in at the same time.
Excellent. Ippolito, thank you very much indeed. Ladies and gentlemen, that was Ippolito Cattaneo, who's the Chief Executive Officer of Ajax Mining. Remember them, shares up since they listed an Aquis earlier this year, up from 4p to almost 7p now as we speak. So I'm afraid that's all we got time for today on Edison TV, but do come back to us for more such investment ideas in the very near future. But until then, you have a capital day.